Well, good morning. I hope your Sunday is off to a good start. Today we're going to talk about banking. It's changed a lot over the years, and this morning we'll talk with someone who's been part of that change. It starts right now.
From TV6, this is The Ryan Report. Here's your host, Don Ryan.
Well, Ken Palmer can give us a unique perspective on banking. He took his first job in that business about 50 years ago. Eventually, his career path brought him to Upper Michigan, where he spent most of his years in the banking industry. He's presently the chairman, president, and CEO of Range Financial Corporation, which has banks in Marquette, Dickinson, and Houghton counties, as well as Green Bay, Wisconsin. Ken will be retiring in a few months, so I thought this would be a good chance for him to give us some insights and share some memories about the business of community banking. Ken, welcome to the Ryan Report.
Well, thanks, Don. Appreciate being here.
Good to have you with us. Now, a little background, first of all, so people get to know you. I know you're not a Yooper, but you are a Michigander by birth, I think.
I'm close to a Yooper.
Close to a
I was
Yooper.
born and raised in the northern part of Lower Michigan,
Okay.
and spent a lot of years there. So even I remember before the Mackinac Bridge was built, taking the ferry across. So
Oh yeah, I remember those days.
That's been a long time ago, and watching the bridge being built. But my path led me to Lower Michigan,
Okay.
and I was in Ionia for 4 years, in Battle Creek. In Battle Creek, I heard about this company called First of America buying banks in the Upper Peninsula. So I talked to them about joining them and moving to the Upper Peninsula. I like to hunt and fish and wanted to go to Ironwood, and they said, well, we have an opening in Menominee. And I said, well, where's Menominee? I'd never heard of it. And long story short, many years later, I'm there.
Well, let's just jump back a little bit. First, though, you know, you came out of high school and
Correct.
decided to go into the Marine Corps.
I did. I was 17 years old when I graduated. Didn't know what I wanted to do. And there were 6 of us in that graduating class that decided we'd go on the buddy program and join the Marine Corps. So on April Fool's Day 1964, we all took the oath of office, or I guess you would call it oath of office, to join the Marine Corps, and spent 6 years in the Marine Corps, 4 on active duty and 2 on non-active duty.
Okay.
So.
And really, that kind of prepared you for your banking career, didn't it? It doesn't. You might not think about the Marines that way, but in your case, it did.
Well, it did, because I was, when they do the testing to what's your best occupation there, they decided that mine was administrative. And so I was the administrative aide to the colonel in charge of the 1st Marine Battalion, and spent years learning a lot about administration. When I returned home, I went to Traverse City and began my banking career in Traverse City.
Okay, and that was with a company called Associated, I think.
Associated Finance at that time.
Let me just stop for a minute and give you some recollections of mine, because banking has changed so much. You know, my recollection of banking in Marquette County in the old days, you know, there were 2 banks in Marquette, Union National, First National.
Correct.
There were 2 in Ishpeming, Miners in Peninsula, and there was First of Negaunee.
Right.
And the DNN had a small presence here, and I think credit unions were kind of just getting started.
Right.
And that's changed so dramatically, not just the ownership here, but I mean, the change has occurred all over the country, hasn't it?
Correct, it sure has. When I got into banking, there were roughly 15,000 banks in the country. Today that number is under 6,000. In the Upper Peninsula, there were roughly 45 separately chartered banks. And I think at the end of 2017, I think we were down to 16. So dramatic changes.
And, you know, we're not talking about branches and ATMs. We're talking about actual banking organizations.
Correct, ones that hold charters to be a bank.
So you mentioned, you know, you got involved with First of America, and in a way they were kind of one of the early ones to start this trend of going out and acquiring other banks.
Correct. I got started when I got started with them. They had bought 7 banks in the Upper Peninsula, and Stambo and Calumet and Ironwood and Munising, and so that was how I became interested in it.
And you mentioned a minute ago you wanted to go to Ironwood. What was the reason behind that?
Fishing and hunting. I loved to muskie fish, loved to walleye fish, and liked to deer hunt at that time. I haven't done any of those for quite a while, but that was my love at that time as a young man.
So eventually this career brought you to Marquette, right?
It did. I was in Menominee, and we had 7 separately chartered banks, and as industry was changing a lot, they decided that they were going to take all charters and make them one, headquartered in Marquette. And so they had talked to me for a long time about coming up here, and I didn't make the move, but finally it was my opportunity to be, in that case, the number 2 person in the bank, eventually becoming the number 1 person. So.
And you know, the bank that they acquired here was the Union National Bank that
Yes,
I
it was.
mentioned.
Correct.
And I don't know if we can even figure out where the Union National Bank would be today.
Well, it doesn't exist because it was, the shareholders were
Right.
bought out by another company, and they just became a part of that company. And I think it's probably 2 or 3 changes along that way.
Right. Somebody bought, First of America bought them, somebody bought First of America.
Right. And now that was National City that bought First of America, and then PNC Corporation in Pittsburgh purchased National City.
Okay. And how did you wind up in Negaunee and Marquette now?
Well, when First of America sold to National City, I just didn't care for the culture in the company. And Jerry Junak was retiring as president after many years there, and Arvid Evans old. And so I applied for the job and was fortunate to be picked.
Okay.
So that was 20 years ago already.
And you've really done a lot with that organization since taking over. It's become Range Bank, and you've
Correct.
also acquired some other banks as well.
We acquired one bank, but when I joined the bank, the first thing we did was try to grow it, and so we've grown. We had assets under management about 75 million at that time. Today we're close to 800 million.
Wow, that's 10 times growth.
Right. We purchased one bank, and that was from Jim Rupee in Calumet.
Okay.
I love the copper country and the university that's there, Michigan Tech, and being here, we've got a great university in northern Michigan. So to me, it's important. It's important for a bank to be in a college town.
Okay. We'll talk more about your banking experiences after we take a break. Back with more on the Ryan Report in just 2 minutes. Our guest this morning is Ken Palmer, who is the chairman at Range Bank. Let's touch on that a little bit because the transition is already beginning. I know you're officially retiring at the end of June?
June 1st.
Okay, June 1st.
Right.
Okay. But your replacement is already taking on some of your assignment.
Yes, we named Roxanne Dost as the president on September 1st so that she could slide into the position relatively easy. She's been working with me for 20 years, a great person, well established in the community, and will do a great job as my replacement.
Okay. Let's talk about what you've seen. Other than we just talked about the way ownership has changed.
Right.
How has banking changed?
Well, in addition to the number of banks changing dramatically, I think probably the biggest things have been the amount of compliance that we have to comply with now and the costs associated with that. Interest rates have been very volatile during my career, and the prime interest rate, which today is 4.5%. In December 19th, 1980, which was my daughter was born, the prime rate hit the highest in its history, 21.5%. Today it's 4.5%. It's been as low as 3.25% when the financial recession started in 2008. So dramatic changes. And of course, back when it was so high, Paul Volcker was the chairman of the Fed, and his goal was to reduce inflation and stop it because we were really a country where inflation was
Right.
really out of control. Now today we're very low interest rates trying to get inflation up. The Fed's goal today is to get inflation to 2%,
Right.
and they're struggling to do that.
The interest rate, I mean, this works against the banks and the consumer, doesn't it? Really?
It does.
Other than the loan, if you want a low interest loan. But.
Yep, it does, and the problem is that once, you need those low interest rates to get the activity going, but you have to get back to a normal environment as well because the consumer, and especially, the baby boomer population, which a lot of them depend on interest as to supplement their way of life, and when interest rates are 1% or below for the consumer, that's just not good for them.
Yeah, I've talked to investors, and it's tough to find a conservative investment for people who are already retired or close to retirement.
That's correct.
Who used to be able to put money in a CD for 5, 6, 7, 8%
Right.
maybe.
Yep. Well, I can remember when you could buy treasuries, so CDs weren't much different at that time. But back in the 80s, treasuries were 30-year treasuries. You could buy for 15. You could get 15% interest on those, and CDs were close to that.
How about business banking? Has that changed much over the years?
It's changed tremendously. I think the skill level is important, and you have to have the right people to help businesses, because we have to know as much about their business as they do, or as much as we can, so we can provide the proper financial advice, make sure the loan's structured to meet their cash flows, because if they're going to pay it back, they need the proper cash flow and structure. So we try to help them as much as we can, but really they'll have a trio of financial advisors and accountants and lawyers and bankers. So it's a combination of helping businesses.
And banks are really pretty critical to economic development, aren't they? Because almost every business needs some financing to get off the ground and to keep operating in many cases.
Correct, and I think that's been the history of community banking, is that community banks, when there were 16,000 almost, they were in a lot of small communities that a lot of big banks didn't want to be in because it was too small for them, and they helped a lot of businesses get started, and Marquette is no different.
You did mention compliance.
Yes.
And people probably don't realize, but without going into too much detail, what are you faced with there?
Well, I think the compliance that came about as a result of the financial struggles that started in 2008 and continued. Remember, we had a large stock market drop at that point. We had to add a lot of people and programs, and cybersecurity is another area that's very highly compliant. And we probably had to add about $500,000 in expense or more just to comply with all these things, something that we didn't have 10 years ago.
You know, and there's some talk, there's some activity in Washington now looking at revising that legislation. From what you've seen so far, might they address the concerns you have or not?
I doubt it. I think it's a hot political item, and both sides are very strong in their opinion of it. And the problem is, as a Congress today, we're not talking to each other, the Republicans and Democrats, and we need to get back and start taking care of our business and not each other.
Yeah,
so,
good point. I have some more questions for you. We'll get to those in just a couple of minutes. And we'll get back with you in just 2 minutes from now. Guest this morning again is Ken Palmer from Range Bank. Ken is the chairman, retiring on June 1st. Let's talk about cyber. Let's talk about internet. First of all, roughly how many people today don't come into a bank anymore, but do their banking in some other way?
well, these statistics are showing that probably 20 or 30% and climbing of people today use their mobile iPhone, and more so than coming to the bank. But people want both. They want the branch and they want the technology. A lot of online banking. You got a lot of people that are retired head to Florida and Arizona, and they continue to do their banking online through either mobile banking or their laptop.
And you mentioned that we had a previous conversation that 10 years ago you were just kind of thinking about it. We
were. 20 years ago, when I joined the bank, one of the first things Roxanne asked me is, when are we going to get internet? So you think about that. You would never say that today.
Right.
I mean, and so we went in a 6-month time period, because Roxanne's very technology savvy, and so we went in that next 10 years probably, we just had all kinds of technology. We have cutting edge technology in all of our products and services. So I don't think there's anything out there that we don't have to some degree.
And of course, with the younger generations, this is what they want. They probably don't want to come into a bank unless they really have to. That's
correct, but there's bigger transactions that they want to come in for, and there is the cash issue. But you can do a lot today with a debit card and an ATM card and your phone. And what I see is people are on that phone all the time. So.
And this, of course, brings up the big issue of cybersecurity and all the issues which really face the whole banking industry. Can we come to grips with that?
Well, I think no matter what you do to protect it, there's people out there trying to to get in anyway. And we have a very tight security program. We've just hired a very seasoned IT person to manage the stuff for us at the bank, and very experienced, and we work closely with the regulators to make sure that we're doing all the things we need to do to protect people's privacy and their accounts.
And of course, consumers have a role in this too.
Well, they do. You have a responsibility to make sure if anything is suspicious that you report it and that you talk to us. And we do a lot of social media and a lot of connection with other banks, that if there are trends going on in the industry, whether it's counterfeit $20 bills or if it's somebody that's trying to use your account, that we spread the word.
We don't have a lot of time left, but I do want to touch on the fact that you did have an opportunity to serve on the board of directors of the Minneapolis Federal Reserve. What was that experience like?
Well, it was an incredible experience because it was during the time when we were going through this, trying to get inflation increased and trying to get the right balance, and the government trying to get the economy moving the way it needed to move. It was very interesting. I went to Minneapolis almost monthly for 3 years, and made a lot of great people. You understand a lot of what's going on in the economy, and my my role as a director, main role, was to bring back on-time, real-time data from the marketplace in the Upper Peninsula. That the Fed in Minneapolis has most of the Upper Peninsula is under their responsibility. So they want to know, they know all the economic statistics, but they want to hear from businesses. So I talked to a lot of businesses, a lot of other bankers, and people to get real-time data and information back to the Fed.
And of course, that information then winds up in what is the Federal Open Market Committee?
Well, it goes to the Board of Governors of the Federal Reserve in Washington, D.C., and there is an open market committee that meets to set interest rates. And
that's kind of what we hear of most of the time, is when the big announcement comes out every couple of weeks or every month.
Well, it's not every month. They do have a set schedule when they do it, and it's published, and a lot of the information and the minutes of their meetings are on the Federal Reserve website, so people can follow it as closely as they want to.
What does the future hold? Hard for us to predict, I'm sure, as far as banking goes.
Well, I think we're going to continue to see a consolidation. We're going to continue to see technology grow. We're going to continue to see people's jobs change dramatically. I think when I look at my grandkids who have their own iPhones and their iPads, and anytime I get confused, I give it to them and they straighten me out.
Right.
And I think that that generation of kids, it's going to be, that's when the real changes will occur.
Could you have imagined the changes that have occurred when you first started out?
Oh, there's no way, Don. I mean, we had about a 5x8 card that we made our mortgage loans on. Today, with all the regulations, you probably have a stack of papers that nobody wants to read, but the government requires it. And the sad thing is, you used to be able to get deals done for people that wanted to get into their homes or cars very quickly. Today, with all the regulations, there's a big time lapse between the time you make that application and the time you can close. Okay. Not by our choice, but by the government's choice.
Well, you still have to work for a few months, but good luck.
2 months.
Good luck in your retirement.
Okay, thanks, Don.
Okay,
Appreciate it.
thanks very much for coming in this morning.
Thank you.
I'll be back with some other thoughts for you in just a couple of minutes. Well, our conversation this morning about banking got me thinking about a couple of different things related to banks, and the things we keep there are money, if we have any. The first thought has to do with something that all of us remember, the piggy bank. And despite what you might think, it's not called that because they often look like a little pig, but because pig, spelled P-Y-G-G, is an orange-colored clay commonly used during the Middle Ages as a cheap material for making pots to store money. Pretty certain this is information you're not going to get anywhere else but here on the Ryan Report. Apparently, before we had banking institutions like we have today, people would store their money in pig pots or pig jars. As earthenware became supplanted other materials, things like glass, plaster, and plastic, the name gradually changed from what it was made of to instead refer specifically to the shape of that bank, the little pig we so often see. Do kids still use piggy banks? Yes, they do. but unless they're really young, they're probably not as enamored with collecting coins in a pig that probably won't add up to enough to buy a video game, even if it's full, unless they all happen to be quarters or half dollars. Here's a little more money trivia for you. I got my first job when I was a sophomore in high school, working at WJPD AM radio in Ishpeming. My pay was the minimum wage, 75 cents an hour. I know, you're thinking that just doesn't sound like much money, but I was worth every penny of it. That thought piqued my curiosity, so I decided to do a little more internet research, and here are some things I learned about the minimum wage. To start with, regarding my first job and the 75 cents an hour pay rate, as paltry as it sounds now, it is comparable to being paid about $7 an hour today, so it's really not that far out of line. Here's another fact for you. The U.S. minimum wage law was first approved in 1938, and the amount was 25 cents an hour. That really doesn't sound like much, but it was probably equivalent to about $4 or $5 an hour today. Since that humble beginning, the minimum wage has increased 22 times to its present level of $7.25 an hour. The last increase was in 2009. I should point out that this is the federal minimum wage, and it's higher in many states. In fact, as of January of this year, there were 29 states with a minimum wage higher than the federal minimum. Like to guess what the country was that first adopted the minimum wage? I don't think many will guess this one. It was New Zealand in 1894. It appears Australia may have come along second. So even though that 75 cents an hour I earned on the first job doesn't sound like very much, I should tell you it was enough to allow me to buy my first car, a used 1954 Plymouth. And buying that car was one of the highlights of my young life. I'll be back in a minute. We're out of time for another Sunday. The Today Show is just about set to roll. Don't forget, if you missed this show, it is available on UpperMichiganSource.com. Past episodes are there now. Today's show should be there at about noon tomorrow. Thanks to Ken Palmer for joining us this morning. Good to get his perspective after 50 years in banking. And thank you for tuning in. Hope we can see you again right here next Sunday morning.